Do you ever wonder how wealthy families stay rich generation after generation while avoiding rules everyone else follows? They're using a secret playbook. We're exposing hidden mechanisms allowing elite families to move billions undetected while bypassing taxes completely. $50 trillion moves through shadow wealth transfer systems annually. Elite families transfer fortunes using tactics invisible to average citizens. Offshore trusts, art collections, family offices operate outside normal oversight. The Rothschilds, Rockefellers, Waltons perfected these patterns over centuries. Welcome to Financial Shadows, exposing shadow wealth transfer patterns protecting elite billions. 3 methods allow wealthy families preserving fortunes across generations while avoiding taxation crushing middle class. Mainstream media won't tell you about wealth preservation at elite levels. Richest families don't hold wealth in banks. They use complex structures, making assets invisible to tax authorities. Offshore trusts in Cayman Islands shield billions. Art collections in Geneva free ports avoid taxation. Family offices operate with zero oversight. Panama Papers exposed fraction of this shadow system in 2016. 11 million documents revealed offshore structures. That leak showed only small percentage. 50 trillion estimated offshore right now. 3 primary shadow transfer patterns exist. First, uses offshore trusts removing assets from oversight. Second, leverages art and collectibles bypassing assessments. Third, employs family offices as unregulated superpowers. These transfers explain how billionaires pay lower tax rates than workers. Warren Buffett noted his secretary pays higher rate. Elite wealth structure allows legal avoidance through shadow mechanisms. Who owns your wealth ultimately? Answer reveals uncomfortable truth about systems protecting elite fortunes while extracting maximum from citizens. Comment which strategy shocks you most: offshore trusts, art free ports, or family offices. $50 trillion hidden. How does this much wealth disappear from public view? Understanding shadow wealth transfer mechanisms explains everything about modern inequality. Shadow transfers start with fundamental principle. Wealthy families don't want wealth visible to tax authorities or public scrutiny. Solution involves moving assets into structures operating outside normal financial systems entirely. 3 layers create shadow wealth invisibility. First layer removes wealth from domestic jurisdiction through offshore movement. Second layer transforms liquid assets into illiquid, untraceable forms. Third layer fragments ownership through complex corporate structures, making beneficial owners invisible. The mechanics work like this simply. Elite family owns business worth $1 billion. Instead of holding directly, they create offshore trust in Cayman Islands. Trust owns holding company in Luxembourg. Holding company owns actual business assets. Result? Family controls billion, but appears to own nothing on paper. Subscribe right now because this pattern destroys middle-class wealth while protecting elite fortunes. Hit that like button hard. You're either learning this early or staying broke forever. Tax authorities struggle tracking these structures because they span multiple jurisdictions deliberately. U.S. authorities request information from Cayman Islands. Cayman privacy laws block disclosure. Information never surfaces publicly. Art and collectibles provide second shadow mechanism. Picasso painting worth $50 million sits in Geneva Freeport. No sales tax paid. No capital gains realized. No wealth tax applied. Painting appreciates tax-free indefinitely while serving as collateral for loans providing spending money. Family offices represent third mechanism operating as private banks. Manage billions for single family with zero regulatory oversight. No disclosure requirements. No public filings. Complete financial privacy for ultra-wealthy. The shadow wealth system creates 2-tier society. Regular citizens pay taxes on income automatically. Elite families structure wealth, paying minimal taxes legally through complexity. Middle-class wealth gets extracted through taxation and inflation. Elite wealth grows protected in shadow structures. Gap widens every year systematically. Which shadow method would you use if you had billions? Comment your strategy below. Offshore trusts represent first shadow transfer pattern elite families perfected. Cayman Islands, Switzerland, Luxembourg, Panama host trillions in hidden wealth structures. How offshore trusts work exactly? Family creates trust in jurisdiction with strict privacy laws. Trust legally owns assets, but family maintains control through trustees they select. Domestic tax authorities see nothing because offshore jurisdiction blocks information sharing. Panama Papers revealed this system's scale dramatically in 2016. 11 million leaked documents exposed 214,000 offshore entities. World leaders, billionaires, celebrities, all using same structure. Vladimir Putin's associates held $2 billion offshore. 12 world leaders appeared in documents. But Panama represented just one firm in one jurisdiction. Cayman Islands alone holds $4.3 trillion in banking deposits. Population, 65,000 people. That's $66 million per resident statistically. Obviously, residents don't own this wealth. Elite families worldwide use Cayman structures for invisibility. Swiss banks pioneered wealth secrecy for centuries. Banking secrecy laws made Switzerland preferred destination for hidden fortunes. Recent international pressure forced some transparency, but wealthy families adapted quickly, using new jurisdictions. Delaware emerged as domestic tax haven, surprisingly. U.S. state allows anonymous shell companies easily. No disclosure of beneficial owners required. Over 1 million entities registered in Delaware. More corporations than residents exist there. The mechanics stay simple intentionally. Complexity creates confusion, deterring investigation. Layers of offshore trusts, holding companies, nominee directors make tracking beneficial owners nearly impossible for authorities. Offshore structures serve legitimate purposes sometimes. Asset protection from lawsuits, estate planning across generations, international business operations. But scale of offshore wealth reveals primary purpose remains tax avoidance. Middle class can't access these structures practically. Offshore trust setup costs $50,000 minimum. Annual maintenance fees $20,000 plus. Only ultra-wealthy benefit from shadow offshore system. Comment: which tax haven surprises you most? Cayman Islands, Switzerland, or Delaware? Art and collectibles provide second shadow wealth transfer pattern. Picasso painting worth $50 million avoids all taxation, sitting in Freeport warehouse. Geneva Freeport operates as tax-free storage facility. Art enters duty-free zone, never leaves technically. No sales tax, no import duties, no capital gains tax when value increases. Painting appreciates completely tax-free forever. Wealthy families store billions in art, wine, gold, collectibles inside Freeports. Singapore, Luxembourg, Delaware operate similar facilities. $1 billion worth of art sits in Geneva Freeport currently estimated. How does art wealth transfer work? Family buys Picasso for $10 million. 20 years later, worth $50 million. $40 million gain, completely untaxed. Family uses painting as loan collateral. Bank lends $30 million against artwork. Family spends loan money tax-free. Collectibles market lacks transparency entirely. Private sales between wealthy buyers happen without public record. Auction houses facilitate discrete transactions. True prices often hidden deliberately. Wine collecting serves similar purpose.
Rare bottles appreciate significantly, stored in bonded warehouses avoiding taxes. Wealthy collectors hold millions in wine portfolios as alternative assets. Classic cars provide another shadow vehicle. Ferrari sold privately for $20 million. No capital gains reported. Wealth transferred invisibly through collectible transactions. IRS struggles valuing collectibles accurately. What's authentic Rembrandt worth exactly? Appraisers provide valuations serving client interests. Undervalue for estate taxes. Overvalue for charitable deductions. Wealthy families donate art to museums frequently. Artwork appraised at inflated values. Charitable deduction reduces taxes massively. Museum displays art while family maintains naming rights and prestige. Shadow art market allows wealth moving internationally undetected. Painting ships from New York to London to Hong Kong. Each transfer happens privately. Wealth crosses borders invisibly through art transactions. Comment your pick: art, wine, or classic cars for hiding wealth.
Family offices represent third shadow wealth transfer pattern. Private banks managing single families' fortune with zero regulatory oversight. Wealthy families worth 100 million plus create dedicated family offices. These entities operate as unregulated financial institutions. No disclosure requirements. No public filings. Complete privacy for ultra-wealthy operations. 10,000 family offices exist globally, managing trillions. Walton Family Office manages Walmart fortune. Koch Family Office controls energy billions. Soros Family Office manages hedge fund wealth. Each operates independently without oversight. How family offices work. They hire investment managers, lawyers, accountants, serving single family exclusively. Manage investments, tax strategies, estate planning, philanthropy. Everything handled privately, away from public view. Family offices use SPVs extensively. Special purpose vehicles, compartmentalize assets. Each investment sits in separate legal entity. Liability isolated. Ownership obscured through layers. Modern tactics include digital trusts increasingly. Cryptocurrency enables borderless wealth transfer. Bitcoin moves internationally, instantly. No bank intermediaries, no government oversight. Perfect shadow transfer mechanism. Stablecoins provide dollar exposure without traditional banking. USDC and USDT allow families holding digital dollars outside banking system. Wealth stored on blockchain, invisibly. Digital trusts combine traditional structures with crypto assets. Offshore trust owns crypto wallet. Family controls private keys. Assets move globally, instantly, tax-free. Delaware statutory trusts gained popularity recently. Combine domestic legitimacy with opacity. Assets protected from creditors. Beneficial owners remain private. Middle ground between offshore and transparency. Wealthy families adapt continuously. Regulations tighten in one jurisdiction, shift to another. New technology emerges. Adopt for wealth camouflage. Shadow system evolves constantly, staying ahead of oversight. Family offices demonstrate wealth inequality's structural nature. Regular citizens can't access these mechanisms. Only ultra-wealthy benefit from shadow financial infrastructure. Which modern tactic worries you most? Family offices, crypto trusts, or SPVs? Comment below. Shadow wealth systems face growing pressure in 2026. Global initiatives targeting offshore tax avoidance gain momentum rapidly. OECD leads international crackdown. 140 countries signed agreements sharing tax information automatically. Bank accounts, trusts,
corporate structures, all reported across borders now. U.S. Foreign Account Tax Compliance Act forces banks worldwide reporting American account holders. Non-compliance means exclusion from U.S. financial system. Most banks comply, revealing hidden wealth. European Union implements wealth registries, beneficial ownership information becoming public in member states. Anonymous shell companies face elimination gradually. Wealthy families adapt predictably. Shift from traditional offshore havens to family offices with better privacy. Move wealth into collectibles, harder valuing. Embrace cryptocurrency, operating outside banking system entirely. But societal impact grows regardless. 50 trillion offshore, while governments claim insufficient funds for infrastructure, healthcare, education. Wealth gap widens to historic levels. Democracy erodes when concentrated wealth influences policy disproportionately. Elite families funding politicians, protecting shadow structures. Regular citizens pay higher effective tax rates than billionaires. Economic inequality perpetuates across generations. Inherited wealth advantage compounds. Self-made billionaire myth collapses under scrutiny. Most wealth comes from inheritance and shadow transfers. Social stability threatened by extreme inequality. History shows wealth concentration precedes collapse. French Revolution, Gilded Age reforms, Great Depression, all followed extreme inequality periods. The 2026 moment arrives critically. Continue protecting elite shadow wealth, or implement genuine transparency in taxation. Future depends on collective action, demanding accountability. Understanding shadow mechanisms empowers informed citizens. Transparency remains hidden wealth's greatest enemy. Public pressure forces change, eventually. Which concerns you more? Offshore secrecy continuing or government overreach? Comment your view below.
3 shadow wealth transfer patterns exposed completely. Offshore trusts hide trillions. Art and collectibles camouflage billions. Family offices operate unregulated. Who actually owns your wealth now? Understanding these mechanisms provides critical advantage. Knowledge empowers informed discourse and advocacy. Elite families depend on public ignorance maintaining shadow systems. Transparency remains hidden wealth's greatest enemy. Public scrutiny forces accountability. When Panama Papers leaked, governments acted. Public pressure drives change always. But legitimate privacy concerns exist. Not all offshore structures hide illegal activity. Asset protection from lawsuits serves valid purposes. International business requires complex structures sometimes. The balance matters critically. Reasonable privacy versus systematic tax avoidance. Individual rights versus collective societal needs. This tension defines modern wealth debates. What can regular citizens do practically? Support transparency legislation. Demand beneficial ownership registries. Vote for politicians prioritizing tax fairness over elite protection. Collective action works demonstrably. Swiss banking secrecy ended through international pressure. Automatic information exchange became standard globally. Change happens when citizens demand it persistently. For personal wealth protection legally, understand tax laws thoroughly. Maximize retirement accounts. Use trusts for legitimate estate planning. Legal optimization differs completely from shadow avoidance. The investigation complete. Shadow wealth patterns exposed. 50 trillion hidden offshore. Art warehouses holding billions. Family offices operating secretly.
Systems designed protecting elite fortunes while extracting maximum from middle class. Financial shadows revealed mechanisms. Understanding empowers action. Transparency defeats hidden wealth. Collective scrutiny holds ultra-rich accountable. Equitable future requires informed, engaged citizens. Your move now. Accept shadow systems or demand transparency. Portfolio survives through knowledge. Democracy survives through accountability. Comment your decision. Protect elite privacy or demand full transparency. Choice determines future.